Welcome everyone to Vested Interest. This is Shane, and in this video we are going to cover the weekly portfolio update. We did add $1,542 to the portfolio in new capital. We'll also go over any dividends received, any options I was in. But before we get into the video, for those of you who may be stopping by for the first time, on this channel we focus on dividend growth investing. It's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with a positive cash flow that covers the dividends, and companies with a high return on invested capital. I utilize both a dollar cost average approach, consistently investing in the portfolio every week, and I cover my investments every week on this channel. That's what this video is. This is the portfolio update video. Every Sunday morning, typically I put this out. Like I said, I cover all my investments. It's free to see what I'm doing. I don't have anything to pay for. There are no paid links you need to go to, or paid sites you need to go to, or any other sites you need to visit to enter in your personal information. It's all free, out in the open. You'll see what I'm doing. I think it is important for people to see a real portfolio built out over time. I am not a professional guru. I am not an investment portfolio professional. That's not what I do. I go to work every day. I have a family, probably just like a lot of you out there who are watching. But again, I think it's important for people to see a real portfolio built out over time by a real person, the ups and downs associated with it. So there's nothing to see, or I'm sorry, nothing to pay for on this channel. But if you would like to help me out, the way you can do that, if you could hit that thumbs up button down below if you find any value in the content, if you are a dividend growth investor, make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the vested interest community. I know a lot of you out there are watching the videos who are not subscribed, so make sure you hit that subscribe button and join us on this journey to financial freedom. Hit the notification bell so you're notified whenever we put out any new content. Along with these weekly portfolio updates, I do a stock pick of the day series Monday through Thursday whenever the market's open. So again, make sure you hit that notification bell and drop a comment down below. Let me know what you think of the video. What did you add to your portfolio this week? Were you paid any dividends? Who paid them out? How much did you receive? What are you buying as we enter in a new month, right? A few days into August now, July in the rearview mirror, over half the year gone, entering in the last part of the year here. Let me know what you want to add to your portfolio over the rest of the year here in 2025. Love to hear from you. Doing all that really does help out a small YouTube channel like mine. So again, hit the thumbs up button, hit the subscribe button, make sure you hit that notification bell, and drop a comment down below. One last thing, make sure you watch the videos all the way to the end. That also helps with the YouTube algorithm. It helps to spread these videos a little bit further, helps to get the word out. Dividend growth investing, in my opinion, is the best way to one day reach financial freedom. Now that we've got the sales pitch out of the way there, and again, appreciate everyone who's taken the time to do that, and a special thank you to all the subscribers out there. You guys are awesome. We will get into the first activity in the portfolio, which will be options. All right, so options have not been going well this year, but we did get a couple to hit. Not a lot in options premium. We did do 2 contracts, one on Kraft Heinz, one on Comcast. So we'll start with the Kraft Heinz one. Here, -1 means 1 contract. So that means 100 shares of Kraft Heinz. So I own at least 100 shares of Kraft Heinz and entered into what they call a covered call. And covered means I own the 100 shares. So I had this 1 contract on KHC, which is Kraft Heinz out of the consumer staples sector, and it expired on August 2nd, which would have been Friday. It was a $35 strike price. So I received 23 cents per share, which amounts to $23, 0.23 times 100. But then they take out these fees, 50 cents and 0.05, so really 55 cents total in fees. So I received out of the $23, $22.45. And we also had sold to open, so all of these, I'm selling the contract to somebody else. 1 more contract, that's what the -1 means. So that was 100 shares of Comcast, ticker CMCSA. Again, another covered call because I own the 100 shares, so it's covered. With the same expiration date, August 2nd, with a $41 strike price. So the strike price, the $35 for KHC and the $41 for Comcast, that means if it's $41 or above that strike price, then those would be called away. That means they're assigned to whoever bought this contract. I received 20 cents per share in options premium here. They take out the same fees, 50 cents plus the 5 cents, so really 55 cents, and I received $19.45. For the 2 contracts, I received $41.90 total in options premium. Now, Both of them were set to expire on August 2nd, which we passed that August 2nd date, right? You're going to be seeing these on August 4th, this Sunday. So those have passed. So the results, Comcast expired worthless, right? It was below $41. So that means I keep those 100 shares and I keep the options premium. Now, Kraft Heinz was assigned, right? See, expired for CMCSA, assigned. That means that it was over the $35 strike price for Kraft Heinz. Whoever bought that contract received those shares at $35, and I get the cash, right? They give me the $35 cash minus the 10 cents here fee that they charge. So these were assigned, but now I have the cash to go back in and I'll run the wheel on this. So basically, I'll do one of two things. On Monday morning, I will go in as the market opens at 9:30. I will try to run a contract. Hopefully this is falling back. I will probably use the same $35 strike price. Now, if it looks like this one's going to run up or drop way back, if this was to open the week at, like, let's say $34 or $33 or something, then I would just buy the 100 shares and then I'd keep the difference and reinvest the difference. So we will see which way this is heading on Monday. You know, if it looks like it's going to run way up, I may run the wheel on it. If it looks like it's going to drop back down below 35 per share, I may just buy them outright and keep the difference, right? Because I have the cash right now to do that. We have to wait and see what happens on Monday, but these 100 shares were assigned. I do intend to either repurchase them outright or, like I said, run the wheel and try to get them assigned at the $35 or even below, depending on what happens on Monday morning. But those were the options placed for the week. Let me know what options you were in for this week, if any. And these weren't the only two I put out. Just like every other week, I'm putting out 7, 8 different contracts. I think I showed them the week before last where I put out 5 or 6 and only 1 or 2 hit. It's just the way it's been going. And I'm trying not to go too low on the options premium. This is about as low as I'm going to go for some of these. You know, these shares are only around $35 to $40 per share. So I'm all right going 22. You know, it's about half a share if I was to reinvest this, which I do. These funds get reinvested right back in with the regular capital. So part of that that $1,500 you saw that I invested, $41.90 came from options premium, right? Let's keep going. Now, we put all the dividends on the same page, but they didn't come in all the same day. August 1st and August 2nd, we received dividends, a total of $495.91. This is, you know, after taxes, more than probably some people are making per week, or pretty close to what some people are making per week, which there's nothing wrong with that. It's just nice to see it flow in and not have to do anything except own the companies that I own that are paying the dividends. So it breaks down like this. On August 1st, most of the dividends came in. We received dividends from AT&T, ticker T, out of the communications sector, paid us $107.28. Now, we do have the DRIP set. DRIP stands for Dividend Reinvestment Plan, and all that really means is any company that pays out dividends, in this case AT&T, CVS, Verizon, and Owens Corning, when they pay out dividends, those dividends automatically go right back in and buy more shares of the same company. So we picked up 5.58461 more shares of AT&T. CVS also paid us out on August 1st. CVS Health Corporation, ticker CVS, is out of the healthcare sector, paid us $135.69. Again, these funds go right back in, picked up 2.23468 more shares of CVS. Verizon Communications also paid us, ticker VZ, out of the communication sector, $225.99. Those funds went right back in and picked up 5.58691 more shares of Verizon. And last but not least, on August 2nd, our other payer was Owens Corning, ticker OC, out of the industrial sector, paid us $26.95. Those funds went right back in and picked up 0.15341 more shares of Owens Corning. Now, these new shares, right, these new shares paid for by the dividends that we received, added an additional $27.35 in passive income over the next calendar year. And that is the dividend snowball effect. You might hear some people refer to compounded interest or the dividend snowball effect. Compounded interest is just money compounding on itself. It's the interest paid, in this case, the dividends paid, reinvesting back into themselves, and those new shares adding more capital. So that's the snowball, right? The snowball starts with I buy shares of these companies. These companies pay out dividends. These dividends go back in and buy more shares, and these new shares add additional capital. That is the visual of the dividend snowball in effect. So that's what people are referring to whenever they talk about compounded interest or the dividend snowball effect. Now, our first purchase was also on July 29th. We added $1,380.21 here. We picked up one share of Vanguard's Total Stock Market ETF, ticker VTI. This is part of our weekly buys. We just did it earlier in the week here. Both my daughters actually had that. Part of the reason this video is coming out late on a Sunday, both my daughters had their birthday this week. August 1st is my oldest birthday. August 3rd is my second child's birthday, my youngest there. Shyla being my oldest, Callie being my youngest. So I was pretty busy this week with 2 birthdays. So I bought when I could. I bought a lot of what I was going to buy Monday before I got into these birthdays. I actually took off Thursday and Friday from work to help my wife with the birthday parties and everything as well, get some things ready around the house. But anyway, that's a different story. We did add $1,380.21. With those funds, again, we picked up the 1 share of Vanguard Total Stock Market ETF, part of our weekly buys, $269.77. Actually wish I would have bought this later in the week because I think it dropped down a little bit more than this, but it is what it is. Nutrien added 2 shares there to our NTR position. This is out of the materials sector. Picked up that 1 share, or those 2 shares at $50.33. 6 more shares to our Comcast Corp position here, ticker CMCSA, out of the communication sector, $40.65 per share there. 20 shares we added to our Enterprise Product Partners, ticker EPD, right before their ex-dividend date. I wanted to juice this one up a little bit. Picked up those 20 shares at $29.79. This is part of this one. Comcast is part of our weekly or monthly buys here for the month of August. So tune into that video if you haven't checked out the 5 stocks I'm looking to buy in August. And last but certainly not least, we picked up 1 share of Procter & Gamble, ticker PG. Picked it up at $170.19. Same thing, Procter & Gamble by the end of the week, I think it was in the mid 160s. I may nibble on this one a little bit. This was part of our last month's buy list, this and Union Pacific. I still may nibble on Procter & Gamble and Union Pacific a little bit over the next month or two, just because I would like to get this to 50 shares. It's mid 40s right now, low 40s. I think I have 44 shares maybe, about the same amount for Union Pacific. I'd like to get those both to at least 50 shares. So the $1,380.21 we added, the new shares that we picked up added $61.44 in passive income over the next calendar year. And we weren't done on August 1st, which was one of my daughter's birthdays there. We did go in the morning and add the last $162.75 to the portfolio. For the week, we picked up 1 share of Medical Properties Trust, ticker MPW, just nibbling on this one right now. Anytime it drops in the mid to low 40s here, or even in the $4 range, not 40s, $4 range, we're adding to this position. MPW is a REIT out of the real estate sector. Valet, this is part of our monthly buys for the month of August as well. So again, if you haven't seen that 5 stocks I'm looking to buy in August video, go ahead and check that out. Valet is out of the material sector. This is a mining company out of Brazil, so there are some tax implications out of this one as well. So make sure you understand the tax implications if you are buying foreign stocks. Either you are going to be responsible for it. In my case, Ally is the brokerage that I use. They take the taxes out for me, so I don't have to worry about it. Picked up those shares at $10.81. I believe this one also pulled back even lower, down to the low $10, $10.30, $10.20, somewhere in there. I'm going to be adding to this one throughout the month, maybe in 10 share tranches, so 10 shares here, 10 shares there, all month while it's down here below $11 per share. And this is the other ETF we are buying weekly, regardless of the price, SCHD, Schwab Strategic Dividend Growth ETF. Picked up that 1 share at $82.35. This $162.75, the shares it picked up, added an additional $11.04 to the portfolio. Total invested $1,542.96. Total passive income with the dividends received plus the new capital we added, $99.83 this week. Very nice to see, almost over $100 there in income added for the week. Quick run through the sector weights here. Communications makes up 9.97% of the portfolio. Consumer discretionary at 7.57. Consumer staples makes up 9.75. Energy, I'd like to continue building out that Enterprise Product Partners for the month, right? For the month of August, that's one I'm looking to buy. So energy, and that's in the energy sector, makes up 5.97. So I'd like to get this in the mid 6s, if not 7 range. We'll see. Health financials 5.60. Healthcare at 14.50. That's still the largest chunk of the pie here. Industrials makes up 6.26. Like to continue to add to Union Pacific there in the industrial sector. Technology makes up 6.53. Cisco is one I'm looking to continue to add to right there. Materials makes up 8.44. Valet, that's going to be added to here over the next month there. Utilities makes up 10.12%. REITs and real estate is still sitting in second place at 11.37%. And ETFs is still the smallest slice here at 3.93% of the overall portfolio. Over here on the right, same portfolio sector weights broken down by percentages, matches the pie, and then also the dollar amount allocated to each sector as well. So it gives you an idea of the breakdown of the total portfolio by sector. Now here it is. This is the overall portfolio, the total portfolio. Again, I'm going to show this every week. I think it's very important for you to see a real portfolio built out over time. For some of you who are maybe just getting started, some of you who are thinking about getting started, and some of you who are maybe have been doing this for a couple years, a few years, and maybe you're frustrated that the dividend snowball is not growing as fast as you want, or you're not seeing the results that you want. I want you to understand, or maybe you're seeing some red in your portfolio and freaking out a little bit. What should I do? Stay the course. If you've done the research, you know the companies that you've added to your portfolio are good companies. They have growing revenues. Their margins are expanded. Nothing's changed with the company overall. Maybe they just have a pullback because the market's pulling back, or maybe there's some negative news around them, or they missed an earnings or something like that. If they are still good companies and meet the criteria that you set, just because they have pulled back doesn't mean you should sell. You should not panic. You know, if someone told you your car was cheaper today than it was yesterday, you're not going to run out and sell it. Or the home you live in, someone tells you it's worth $10,000 less than it was yesterday, you're not going to run out and sell it. You know, you're going to wait for it to rebound, or you're just going to keep going about your business because those fluctuations don't matter. Overall, what matters is it a growing business? Does it meet the metrics that you set up? And is it in the red? Maybe that is a buying opportunity. When I see red in my portfolio, these are the areas I'm looking to add to, right? Comcast is on my stocks to buy for August list. Valet down 19%. I'm adding there, right? So I'm adding to the positions that are in the red. KHC, another one, because I believe they are still good companies with growing fundamentals and meet the metrics that I'm still looking for. So I'm going to add to them as they pull back. If I thought Comcast was a good buy at $41.29, why wouldn't I buy it at $39.90, 3% cheaper than what I was paying for it before, right? I'm still building out this position, so I should be adding to it. That's what I'm trying to relay to those of you out there. When you see red, don't freak out. It's part of the ups and downs of a market. If you look at a stock, it has a 52-week high and a 52-week low. And a stock can go from its 52-week low to its 52-week high, and right back from its 52-week high to its 52-week low. That's part of the reason I have this 15% of 52-week low, because I like to buy them when they are within 15% of a 52-week low, at a 52-week low, or even setting a new 52-week low, right? I want stocks, the cheaper the better. The stock market seems to be the only one where people see stocks go down and they run away, or they want to sell, right? It'd be like going into a store and seeing a sale on something you were going to buy and walking out of the store because it was on sale. Well, I don't want to buy it because it's cheaper. You wouldn't do that. You'd buy it and maybe buy something else, or you'd buy two of whatever you were going into. That's what these pullbacks means. In my opinion, that's whenever stocks are going on sale. Let me get off my soapbox here. Hopefully that made any sense. Drop any comments or questions down below. Here's the ticker here with all the different positions in the portfolio. How many shares of each I own. Current price as of the close of business on Friday. Market value as of the close of business on Friday. My average cost per share. What I have into each position. The dollar amount. This does include dividends reinvested. Total return, whether I'm up or down, I'm going to show it every week. Percent return, obviously if it's in the green, it's up. Obviously if it's in the red, it's down. I'm going to show you that as well. I want you to see positions I'm up in, positions I'm down in. That's part of investing as well. What sector each falls in. Quarterly, monthly, semi-annual payer. Current dividend yield as of the close of business on Friday. My yield on cost, the portfolio weighting. So what we saw on the previous slide was each sector weights. This is each individual weighting. And I do have a rule here. I do not want any one position to be more than 10% of the portfolio. I do not want any one sector to be more than 20 to 25% of the portfolio. I think the only one that's even close is Johnson & Johnson. Right now is at 6.98% of the portfolio. We're back up on Johnson & Johnson. Remember, this one dropped way back down, back into the 140s, even lower than the 148 cost basis of mine. I think it dropped down to 144 or 146. Now it's back up to 164, right? So it's up again. So this one was just in the red here a couple weeks back. So that's how quick the market turns, right? And it's only 6.98% of the portfolio right now. So I'm not in danger of that one being too high. But if it was to continue to run up, or if I continue to add to this, I would stop at 10% of the portfolio, or even trim out a little bit depending on how far it ran up. Estimated annual income in this column here, payout months in this column, dividend growth year over year here, and where it sits at 15% of a 52-week low. This right here, right, these numbers, and I change them as they change over time. This gives me the number where I want my average share cost to be below, right? So Procter and Gamble, or I'm sorry, let's use Procter. Yeah, let's use Procter and Gamble here, for example. Currently, right, as of the close of business on Friday, it was $170.08. Now, obviously, that is above my cost basis of $143.07, right? So, Shane, why are you adding to that? It's up 18% and it's above your cost basis. Don't you want to be adding under 162.66? Well, yes, technically, I would love to add it under 162.66. But because my cost basis is so low, 143.07, I can add to it at 170.08 and bring my cost basis a little bit up a little bit and still be under where it sits at 15% of 52-week low. So this number here, this 162.66, is the high water mark for where I want my average share cost to be. I don't want my average cost per share to be over 162.66. So I'll add to it a little bit. Like I said, I'd like to get it to 50 shares. It's at 38 right now. I'd like to run it up to 50 shares so long as my cost basis stays low. Now, I'd love it to pull back, right? Love it to pull back into the 160s or 140s or 150s and add to it there. But right now it's above my cost basis, but my cost basis is so low I can still add to it because it won't bring my cost basis above 15% of a 52-week low. Hopefully that made sense. Total shares in the portfolio, 6,537.991 shares. Market value of the portfolio, $280,600.47. I have into the portfolio $260,308.18. This does include dividends, so that's not all funds from myself. It's also dividends reinvested. Total return, $20,292.29, up 7.81%. I don't focus on this, right? That's why it's not circled in red. Current yield, 4.226%. My yield on cost, 4.556%. This is what I focus on. That's why it's circled over here in red. The dividends, the average annual income received from all the positions in the portfolio continues to go up week over week, month over month, quarter over quarter, year over year as I add new capital, as I get capital from some of the options that we're running, and as companies pay out dividends, just like we saw with AT&T, CVS, Verizon, Owens Corning this week, as they pay out dividends and those dividends get reinvested, and the other way as companies raise their dividends. Over here highlighted in yellow, these are all the companies that have raised their dividends already this year. I'm still expecting Verizon to do so down here. I don't think Kraft Heinz will. I'm still expecting Starbucks to. I don't think AT&T will. They haven't been for a while. They cut their dividend a while ago, so I don't expect them to. But I'd like to see Verizon still and Starbucks, and I'm still expecting a couple more dividend raises here. LyondellBasell recently raised their dividend. A couple others recently raised their dividend. EPD recently raised their dividend as well. So that's the other way these funds go up. As companies raise their dividend, this number continues to grow, sitting at $11,858.40 in dividends, very, very close to over $12,000 or $1,000 a month in dividends. I don't think we're going to get there next week, but I believe the week after. So mid-August, we're going to hit over that $12,000 mark or $1,000 a month. Very excited to see that. Can't wait. That'll be the next milestone, and then we'll head on to $2,000 a month. Now, it may take a year or so to get there, but we will get there eventually, and then on to 50, and then on to 60, and then on to 70, so on and so forth. And lastly, dividend growth year over year sits at 6.06. Now, I do adjust this because not all these companies raise their dividend the same year over year. This is just the average from last year to this year so far, 6.06% dividend growth year over year. So if I was not to add any additional capital here, the dividends, the dividend raises from all these companies should average about 6.06%. Well, that is really it for this one. Let me know what you added to your portfolio this week, what dividends you received. Are you running any options? Would love to hear from you in the comment section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, again, I do that Monday through Thursday on a company stock that's pulled back. We see if there's any value presented there. Drop a comment down below. Let me know the company. Let me know what you're adding. And hit that notification bell again so you're notified and you can see those videos coming up. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion, and investing is journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Investment is your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.